In putting the panel and the agenda together, so I'll let her introduce the panelists and talk a bit about water.
Thank you very much.
Yeah.
There's only 5.
When we put the panel together, we were very concerned about addressing two questions that the companies that I work with in the water space address really on a continuous basis from venture capital investors. It really does break down to two questions. The first is what kind of water technology can make sense today when water is almost free? The second question is what kind of a water company would make sense for a venture capital investment given the kinds of requirements that a venture capital investment has for high returns and a relatively low fixed investment? What kind of intellectual property intensive kind of technology can address that kind of environment given where water is today? So we've put together a very exciting panel for you. I'm going to introduce the moderator, and then he's going to introduce the panelists. Mark Levinson is an economist with J.P. Morgan in New York. He spends much of his time on matters having to do with the environment. He is the lead author of a J.P. Morgan publication called Watching Water, a guide to evaluating corporate water risk in a thirsty world. Mark, I'm going to turn it over to you. Thank you very much.
Great. Thank you very much, Laura, and good morning, everyone. I think we have a terrific panel here to talk about a really interesting issue. I think everybody understands that we are increasingly in a time where water is a scarce resource, where concern about water availability and water quality are increasingly widespread and pose real risks. We're going to have our panelists first discuss very briefly their own businesses and how they fit into this picture. And then I'm going to ask a couple of questions and would like to get you involved. We're going to start with Eitan Levy.
Thanks, Mark. I'm Eitan Levy. I'm a CEO of MFC, Bioenergy Systems from Israel. I'm the founder of Aquwise, a leading company in the field of advanced biological treatment of wastewater, and also a venture partner with Israel Cleantech Ventures, Israel's largest cleantech VC. In my current company, MFC, we developed a process for biological treatment of wastewater, which, as a side product, produces electricity or hydrogen. These are electroactive bacteria that, as they are breaking down the organic material in the wastewater, are generating electricity. And we're now in quite an advanced stage of commercializing this technology towards an revolution in the world of wastewater treatment, in which wastewater treatment will become a business rather than a cost center.
Ramesh?
Good morning. Thanks, Mark. I'm Ramesh. I'm the Advanced Programs Leader for GE Water. And what I do is look at external technologies, work with VCs and also entrepreneurs to bring select technologies into GE Water which are relevant to GE Water. GE Water does, as we do, right from desalination to wastewater treatment to distributed systems, and also we have a major chemical portfolio of chemical water treatment. And as an offshoot of the chemical water treatment is coming up with eco-friendly microbial-based technologies, and we have a whole platform of membrane bioreactors, ultrafiltration, nanofiltration, and reverse osmosis systems. And also we are looking for technologies which would be interesting to us from a standpoint of offsetting the cost of energy in water treatment.
Chris?
Hi, I'm Chris Spain. I'm chairman and founder of HydroPoint Data Systems. HydroPoint Data Systems is a smart water management company. Our proven and patented solution, WeatherTRAK, has 16,500 subscribers who, in 2009 alone, will save over 11.3 billion gallons of water and avoid over $75 million in expenses. Our customers include a host of marquee names such as Coca-Cola, Lockheed Martin, Google, Apple, Walmart, over 7 of the top 10 real estate investment trusts in the country, as well as 50 cities and municipalities. What's driving our customer growth is quite simply that we're a green initiative that stands on its economic merits independent of the proven environmental benefits we bring. Our return on investment is anywhere from 18 to 30 months, and that's achievable with nominal infrastructure change out, and because we're a subscription company, nominal upfront capital expense. We address an area of profound waste, and by eliminating that waste, also reduce water costs, but more importantly, reduce other expenses associated with that waste. And our focus is outdoor irrigation, which represents 60% of all urban water use. And of that 60%, anywhere from 30 to 300% is wasted. The reason for that waste is the existing technology is predominantly timers. There's 60 million irrigation systems in the country that are just controlled by timers and consequently don't comprehend any of the key components for intelligent irrigation. We replace that timer with a smart controller, which is compatible with all 60 million systems. And our technology is applicable to both foreign markets, agriculture. We use a high-resolution data feed that's also being used by water agencies for tiered rate structures. And while I wouldn't say we're recession-proof, we seem to be recession-resilient. We grew revenue 72% in 2008, bookings 82%, and our pipeline's increased over $5 million since the beginning of the year.
Aaron?
I'm Aaron Mandel. I'm CEO of Oasis, managing partner at Great Point Ventures. By way of background, my engineering background's in groundwater hydrology. But I've been involved in the past in starting a few companies in the clean tech space, geothermal, biofuels, a company called Great Point Energy, which is here at this event in the gasification space. At Oasis, what we're doing is focusing on significantly reducing the cost of desalination and water treatment. So today, reverse osmosis, the market-leading technology for doing desalination, the reason it's very expensive is it uses tremendous amounts of electricity to create very high-pressure systems that force water across a membrane. And so what we're doing is trying to get away from using electricity because it's a very high-value energy commodity to much lower energy sources for doing desalination. So our process uses about 1/10 the amount of electricity, and all the rest of the energy comes from waste heat or reject heat, which would come out of the back end of an energy process or an industrial process. So by doing that, we can significantly reduce the cost. We can actually get down to less than half the cost of current desalination. And for a lot of businesses that are very water intensive, waste heat is a very available energy resource.
Okay. Many of you were here for our discussions yesterday. We heard some fascinating presentations. And one theme that came up again and again yesterday in discussions about energy is that there's a lot of room to make our energy supply and distribution system much more intelligent. Is there any role for intelligence in the water and wastewater industry?
Well, when you start looking at both drinking water and the wastewater system, energy consumption especially is a significant component in that. And there's a lot of inefficiency in the current infrastructure, the same way the energy infrastructure found out by implementing smart grid technologies. You can have a much better management of load, as well as similarly, there's tons of opportunities in the water sector to basically eliminate waste. At this time, when your capital is short supply, you need to squeeze out every possible efficiency in the water grid. So like smart grid, there is great opportunities in water grid.
Yeah, sorry.
Go ahead.
I think absolutely. I mean, we've created a two-way network that allows us to not just send information down to these endpoints, these appliances, if you will, that are representing 60% of the usage, but we also collect a host of data back so that we can display it in an ASP-hosted dashboard and let our customers understand in real time obstacles to their conservation goals. Well, we see the opportunity in just this one sector, which is outdoor irrigation, which is extraordinarily ubiquitous but very commonplace, if you will. The opportunity to tie in a meaningful way our data with smart water meter data and be able to do a host of water forensics, peak load management, and then in regards to what we see as a key component going forward, where scarcity is driving availability, allowing people to allocate in a real-time basis or a triage basis, if you will, water to those high asset landscape assets that they have, high value landscape assets. So I think And what we're seeing from our customers, particularly our enterprise customers, is this driving demand. Now that we've had them focus on a topic that it's been the ugly duckling of resources, quite honestly. Now that they're focusing on it, they want greater visibility, greater alarm and alerting, and we're able to layer more subscription products on our base offering that include monitoring, F&A, and a host of other services. So I think the growth of IT and making water systems smarter is a huge growth area, in particular because of the need for measurement and verification.
Any role for intelligence in wastewater? Eitan?
Yeah, I think we're splitting the world of water into water and wastewater. So most of the cost item in water and drinking water is in fact the pumping. And pumping cannot be reduced dramatically by just improvements in the pumps, but rather they're thinking out of the box of how to recycle water for reuse at a higher level. Water are pumped, for example, from northeastern California to the hills of Los Angeles, and then they are going down by gravitation to the wastewater treatment plant on the seashore, and additional water are being pumped up for irrigation, for example. If this water will be treated up the hills and used locally for irrigation, it will not only save the cost of the additional new water that are being pumped to the hills, but also pumping the effluent. So there is a lot of features that can be done by efficient reuse of the water. In my country, in Israel, we are reusing 75% of the wastewater. The next country in the world is Spain with 12%, although Southern California, Orange County, is very advanced on this also, but on a country level, there's still a lot to do here in the US. On the wastewater treatment side, the wastewater treatment is a very heavy consumer of electricity. Most of the highest cost of wastewater treatment is the electricity that is spent on aerating the irrigation basins. And any development that can be implemented on this sector, like the technology that we are offering, is one of the solutions in the basket, can dramatically reduce the cost of wastewater treatment.
When you look at the wastewater treatment today, I mean, it's like we are throwing good money after bad money. When you start looking at moving water, which is a significant portion of the cost, which is contributing to not only the major infrastructure cost, which water infrastructure is typically more expensive than an energy infrastructure to lay. And you're also talking about the ongoing operational expenses, which are significantly higher in a water because you're moving it. So I think there are opportunities when you start looking at a venture capital investment from a technology standpoint. What are the areas that would really make some changes in that? One is distributed infrastructure. That's number one. When what Eitan talked about, moving the water, wastewater, because there's already an existing wastewater treatment plant, we are trying to support moving the water to that. Instead of that, a distributed system, I think the time has come for distributed infrastructure to go. Today, 50% of the infrastructure or the housing today is off-grid. So when you have statistics like that, distributed systems are the way to go. Along with distributed infrastructure comes some very, very big challenges: safety, security, operation, maintenance, cost. Each one of those components that you're trying to address are opportunities for VC investments to look at how do you transform. I don't like to call it wastewater. It's a value that's you have not captured yet. So really, it's a value in that water. If you can capture and reuse that value, it's a big thing.
I was just going to add, I think that's going to be one of the areas where a lot of venture investors are very focused on. Because if you take the state of California as an example, 20% of the electricity from California's grid is going directly to moving water around the state. And when you generate electricity and you burn fossil fuels, 60% of the BTUs are just being wasted. So there's huge inefficiencies associated with creating and moving water and then using that water to make very fundamental commodities that the heavy industrials and power generation.
Let me ask a question here that I guess is an economist's question, and you'll all excuse me for that, but that's what I do. It seems to me that these are industries in which, to this point, there have been absolutely enormous economies of scale. Okay, Boston has a big water system and has enormous water treatment plants and sewage treatment plants and does these sorts of things in a very, very centralized way. Are there changing economies of scale in this sector? Aaron, would you start us off with this? Is there a prospect for really changing the scale at which it's efficient to supply water and treat, what are we calling it instead of wastewater? Treat effluent?
The term in Spanish is good. It's gross water. It's aguas brutas. It's something to work on.
Yeah, I think there is. I mean, I think in the wastewater space, one of the big trends in a lot of water scarce areas is wastewater recycle. Right now, when we treat wastewater, all that water is then just discharged into the ocean. That represents fresh water that's lost. And so I think what you're going to find from a distributed perspective is a lot of very local wastewater treatment plants that go to recycle, where the water goes back into the aquifer system, or people actually drink it. We don't like to talk about drinking wastewater, but in some places of the world they do that, and it's actually a lot cleaner than the traditional sources of water.
When you look at, again, I'm fundamentally against calling it wastewater. So I just want to make it clear, because it's a value that you have not captured yet. When you start looking at the components, the so-called refuse water which is coming through, there are each industry, whether it may be municipal or industrial, or we basically take clean water and add components to it. It's like your home garbage. When you mix multiple components in the garbage, it's no value. But when you start segregating it, there's a lot of value. Similarly in water, if it's an industrial plant, the components, what they're putting into it, you know the components. If you can segregate it and reuse some of the valuable components, it's of value, and also you're reducing your disposal costs. So when you look at the fundamental problem has always been technologies which can do that very cost-effective and sustainable manner. Today, 5 years ago, technologies were not available. Today, we are seeing major investments in trying to come up with the petrochemical costs going up. There's a lot of new technologies coming into play, figuring out a way to recover and reuse the raw materials. That's number one. And capturing energy, BTU value from waste, what ITAN's companies looking at and other companies are looking at, is to be able to capture the energy value of that waste. And I think that is where I think a lot of investments are going to go.
Mm-hmm. Chris, how much of what we're seeing in this area is driven by economics as opposed to regulation? And I realize that regulation affects the economics, but would potential customers be interested in water conservation, better treatment of wastewater, et cetera, if there were not regulators breathing down their necks?
No, it's all economically driven. I mean, one of our biggest customers, Walmart, they love the environmental benefits of what our technology provides, but if it doesn't pencil out, we wouldn't be talking to them. But that's true for all our customers, quite honestly. I mean, the real estate investment trusts, they're extraordinarily bottom line oriented. I think what the companies are seeing, though, in regards to the new focus on water, is there's no ethanol substitute for water. And so the price structure of water, and given a host of macro trends, not just the fact that we're going through a dry period, and we're seeing scarcity across the country now in places we haven't. American Water Institute thinks that we're going to be looking at 34 out of 50 states will be in water scarcity in the next 4 or 5 years. But you're also seeing interesting pressures from a variety of other sources. Energy pulls out around 30, we were talking 25 to 30, but 34% withdrawals. So, in alternative energy sources, some of them actually require more water. So, it was interesting. I was on the Hill with Walmart and talking about green jobs, and we're trying to present this fact that, a lot of times green and sustainability is presented as with no cash or ROI payback to it. And I think Walmart's demonstrated very well that actually it can be economically feasible and environmentally well. But you still, for large infrastructure projects, have this inhibitor as far as quick market adoption in regards to the price of water. But we're seeing the price go up across all our customer base pretty significantly.
Hey, Tom, this is true in Israel?
Yes, I think that Chris is talking more on the side of the potable water, which are maybe cost-oriented. On the wastewater side, the drive of the market is the permits, the regulations. And the wastewater treatment is a pain. No one would like to volunteer to treat its wastewater only if you have to and you're obliged by regulations. Once that you have to comply with certain standards, you want to do it at the lowest cost as possible. But yet it is a cost item. It's not driven as a business. The revolution that we are bringing to the market is really shifting it into a business, but this is a change of a paradigm. But currently, wastewater is a pain, and If I have a manufacturing plant and I have to drain my wastewater, I would try to do it in the frame of the legal environment at the lowest cost possible, just to get rid of my wastewater.
Eitan was explaining to me last night when we were discussing that in Israel the wastewater is actually the legal property of the government and you're not allowed to use it on your own, which I thought was an interesting twist.
Yes, it is defined, in fact, that when you pay for the water, you pay for one-time use. It's kind of a license fee to use the water once. And there is some logics behind it, because human use of wastewater add about 100 milligrams per liter of salts to the water. So in fact, every time that you use it, you pollute the water with salts that are very difficult to get rid of. This Aaron can find a solution for. But at least there is a point in not recycling and use it again, and there's only a pay-to-play fee to use the water once. And they have to be treated, injected to the ground, and be used again, and pay again to the government.
I've got lots more questions here, but I'd be happy to have some questions from the audience, if there's anybody who'd like to ask one at this point. We have a mic? Right here, please.
Craig Severance, Energy Economy Online. Several of you have mentioned getting energy production out of the wastewater stream, and I was wondering, is that some of the details of that? How is that working? Is that using methane or some other method?
No, it's not using methane. Anaerobic processes that are producing biogas are quite common, and they are applied wherever they may be applied. The point is that anaerobic processes are quite sensitive to the process conditions, like salinity in the wastewater, or sulfites or fat or suspended solids inhibit the anaerobic process. That's why it's applied in only about 5% of the sector of industrial wastewater treatment. The remainder, 95%, are using aerobic wastewater treatment processes that are very inefficient in terms of cost for sludge removal and power generation. The technology that we are working on is based on electrogenic bacteria. These are bacteria that are just 2 billion years old, used to grow in the bottom of the oceans, and they are electroactive. They develop the capabilities to break the metabolism of breaking down the organic material, not to the conventional ultimate result of H2 and CO2, but doing it through an electrical circuit in which there is electrical current on the way to the oxygen, which is harvested by our process, and we're in fact feeding in electricity to the grid instead of consuming electricity to treat the wastewater.
Aaron, you want to jump in here, please?
Sure, in terms of explaining how our process works?
In terms of the energy aspects of...
Yeah, so the way our process works actually is to use a lot less high-value energy to desalinate water. So with reverse osmosis, using a lot of electrical energy, our process is based on something that's called forward osmosis. So instead of using electricity, we can drive the process with waste heat. And so you get much better energy efficiency, better recovery of energy that you find in a lot of industrial facilities to produce potable water.
I want to, and I know there may be some more questions, I'd like to go to the question that Laura asked for starters here. Why should VCs be interested in this whole area, or for that matter, should VCs be interested in this whole area?
I guess just to make money.
Make lots of money.
We're here for business, aren't we? I think that specifically the water sector within the larger clean tech center wasn't explored so far. There was a kind of a hype on PV in the last years, and wind is also quite progressing well. And the water still haven't attracted a lot of attention from the VC industry. Oasis just recently made a very nice round, and I'm sure the investors are going to see some good results in their advanced technology. But yet there is a lot to be done in the water, and this huge market that is estimated at $400 billion a year, with a lot of potential to add efficiency and to make a revolution in this market, is still waiting for this revolution to come. And I think that some of us in this room will probably take part in this revolution that will take place in the coming years.
Ramesh?
For VCs to get interested, one thing has to be a very unique transformational technology for them to see it's got to significantly change the game. So that when you bring the technology in, it's going to change the way things are done today. And if you are able to do that, like when people talk about Google, yes, it completely transformed the whole industry of looking at that. So in the case of water industry, what a change is going to happen, I see, is there's a traditional, conventional way of doing things, and there are incremental technologies which are always going to happen in that area. Then there are really people who are taking 2 steps out of the whole equation and looking at the entire water picture, and then start looking at how do you eliminate unit operations. When you look at the unit wastewater treatment plant, sludge comes in, water goes out, and then you've got energy being generated. Looking at the whole picture and trying to look at the whole technology platform that needs to come in to change that game. And there is great opportunities there because that is one people have not done exploring. So for VCs, when they look at it, some ideas which could completely transform that whole landscape. And there are companies coming out right now looking at it in a completely different manner. And those are the companies that are going to win.
Chris? Yeah, I think for the most part, energy sucked a lot of the oxygen out of the room for water. And when you go to a lot of these conferences, everybody talks about energy, energy, energy. But the macro signs and the pressure points on water are as extreme, if not more extreme, on water. I think as far as something that's going to be in the public eye and something that's going to get a lot more attention, we're seeing an incredible increase on focus on water. And I think the drivers, unlike other sort of opportunities, are never going to go away. I think they're going to continue to escalate and become more profound. And I think when people look at the overall sector of water, they kind of wrap it all into one big category and don't take the time to dissect out those areas that Ramesh is highlighting, which is basically, those areas where the value proposition now is working is only going to be more compelling as time goes on. And I do think, it's because it's been such an avoided topic, the amount of waste is just absolutely mind-blowing. I mean, I think everybody knows the Starbucks example where how much water that was calculated they were losing because they were let the taps run every day. So I think, we find every corporation that we go into, we ask for their water bills, and they're always shocked when we tell them their own data back as far as how much they've been wasting and how much they can save. So I think there's a host of great opportunities. There's always a great opportunity when you're able to address extraordinary amount of waste. And what's interesting about waste and the stupidity of waste is there's always downstream additional costs associated with that waste.
Darren?
Yeah, I think the water industry is going to go through a very disruptive change, just like the energy, traditional clean tech sector is, and I think that's why it is now a very venture-owned investable space. I think that, at least from my experience, a lot of VCs feel that the next 10 years in the water industry are not going to be the same as the last 20. And I think that's driven by things like what's going on in California now, which is getting worse and worse, and also by the alternative energy sector, because a lot of, if you look at the full life cycle analysis on a lot of alternative energies, they're very clean, but they also use a lot of water, and that's the reason they're so clean.
We had a question over here in the back.
Great. Thank you, panel. I don't know, yesterday at around 10:15, Mr. David Dean from Epuramat did a presentation by which he showed that 99% suspended removal with zero energy technology is here today. So just to point that out, David Dean is sitting up front. Question, do you see carbon credit trading analogy in water? Are we going to get water credit trading?
It's sure, when you start looking at water scarce regions in the world right now, instead of getting credits, but you're talking about the values already being determined by the marketplace today. In certain parts of the world, which is really water scarce today, that's established. So you really don't need to have specific credits to kind of offset, like to justify an investment and so on. In countries like India, China, Middle East, and so on, the water prices are significantly higher. And similar situation is happening, like what Aaron was mentioning and Chris was mentioning, is in parts of the United States where there's massive shortage which is happening. And you're going to see that happening starting with agriculture, which is going to be deprived of water. There are issues which are happening in Alabama, Florida, and Georgia right now on water rights issues around that. So all that is going to highlight. And water credits, when you talk about water credits, maybe US, like anything else, has always been the last. It'll come, but it's inevitable. In a decade, you're going to see that.
I can talk about this a little because I work with a lot of folks who would love to trade anything that there is to trade. And this is a problematic area, frankly. If you think about the other things that are traded in markets in the commodities area, they're all deliverable. They're all physically deliverable. And we are not at the point where the price of water is high enough to make it worth long-distance physical delivery. So there's a significant problem in establishing, say, water futures contracts or that sort of thing, because you can't actually deliver the goods. One can certainly see this changing in the future as the price structure of water changes, but at the moment this seems to be an obstacle to delivering traded products. I think there would actually be a lot of interest in having tradable products that could be used for risk management in terms of water scarcity, and at the moment those really don't exist. Are there other questions?
There is a number that you can kind of derive out of reducing your water consumption that equates to reduction of energy usage and therefore reducing your carbon footprint. And we track that for our customers as well. Now whether or not that'll be able to be comprehended as part of your carbon credit or not, we'll have to see first if energy gets it and then if water can get it too. But I know the Water Footprint Network, the American Alliance for Water Efficiency, and a host of other organizations are very focused on assigning some sort of carbon credit to water reduction and water conservation.
We do. I mean, we do deliver water to some extent. I mean, I think this water is from Fiji, so we are shipping water.
I was recently exposed to the system of nutrients trading that was applied in, I think, in Pennsylvania over the past year. That they are trading nutrients in wastewater. So if one wastewater treatment plant removes more than what he has to remove, he can sell this excess credit to another plant. But this, again, has to be implemented only in a certain watershed, and you cannot sell nitrogen credits from Pennsylvania to California, because the fact that the lake in Pennsylvania is polluted doesn't help the lake in California. In Israel, there's an interesting method of trading water in the type that they're trying to convince farmers to switch to using reused effluent. And a farmer that agrees to give up his water quota and shift to reused water gets a subsidy from the government for 3 or 4 years, including training and technical support to start using water. And this is a kind of water trading, because really you give up your fresh potable water quota for treated effluent.
Interesting. Are there other questions out here? Question right here.
Yes. Excuse me. A few people have mentioned the price of water going up eventually. Any thoughts on when that may happen?
Well, I think Eitan made a good point. There's a difference between potable water and wastewater pricing. But on the potable water, it's going up now. We're seeing profound changes in regards to the tiered rate structure. So what our agencies are really doing is they're trying to keep their base structure low, the initial tier, but they're rising the second and third tier up significantly, anywhere from 10 to 15, 20%. So we're seeing accelerated ROIs based on what we'd estimated for our customer base, just based on this reaction to the scarcity that's happening. Now, of course, there's nothing more local than water. So, even down to the absurd where you could have one county here and another county there and have different pricing. And water agencies have been slow to implement what would be what energy has done in regards to an intelligent pricing model where they have a base operating cost comprehended in the tier 1 structure so that they conserve, they don't run out of business. That's what's happened to the Southeast. But I don't know about the wastewater side.
And most of the cost of water is electricity. Potable water, each cubic meter contains 4 kilowatt hour of electricity. And wastewater treatment, it's about the same figure. Every kilogram of organic material being treated consumes about 1 kilowatt hour of electricity. So I think that as soon as the cost of the carbon footprint will be implemented into the cost of electricity, and I think that we are moving towards this will also be shifted into the cost of water. So since the real resource of water is electricity, we don't pay for the water that we are pumping out of the ground, but we are paying for the electricity to pump it and to move it forward. So the representation of the cost of carbon footprint into the cost of electricity will be directly represented into the cost of water.
That's a good point. And this is one of these watch this space things. the California Air Resources Board in December approved in concept the idea that there should be a tax on water in California as a means of reducing energy consumption, as a means of reducing the carbon footprint. So exactly this logic is being put into play. We had another question right here. Yes.
Actually, I think Eitan answered part of this, but my question, Eitan, good to see you. The question is, for the future, for future development of energy-saving technologies in wastewater treatment, where do you think the price for cap and trade carbon has to be to have a meaningful impact upon development? You know, you can extract, you can save energy, you can create or calculate life cycle cost value, but is the carbon credit potential significant relative to the reduction in energy costs, or is it insignificant? And at what price point for carbon does it have to be meaningful in terms of say your R&D efforts?
The carbon credit price fluctuating recently. In Europe, it's easier to watch because there is a stock market for carbon credits. So it reached about 6 months ago. It was as high as 30 euro per ton of CO2, and now it dropped down to below 10. It's now around 9.5 to 10 euro per ton of CO2. I think that the long term, in the long term, we will have to take the real cost of carbon and to implement it into the electricity. The way that we are now burning coal, not mentioning the hundreds of coal-fired waste power plants in China being built every year, when we are ignoring the impact of the carbon on the atmosphere, I don't think that no longer we can continue in this behavior. I believe it's a matter of, my estimate, 3 or 4 years. We still have to recover from this economic crisis. I don't think that any revolution will take place when we are in such a deep crisis. And then later on, when the global economy will start to recover, we will get back to the track of increasing oil prices and increasing in the carbon credits as well.
Have time for one more question out there? Okay, I have one then. We heard yesterday that a lot of venture capitalists are somewhat extending their time horizons. They don't anticipate being able to get in and get out quite as quickly as perhaps they've attempted to do in the past. How does this affect the water sector in terms of the attractiveness for venture capital?
If you look at technology, fundamental transformational technology development, it needs a little bit more time because you're completely changing. You're fighting against an existing infrastructure, thought process. So that timeline would definitely help, at least make the technologies blossom. That's definitely going to help.
I think the VC industry went through a huge growth during the late 90s and the early 2000s following the internet bubble. And at that time, the plain vanilla structure of a VC was 7 years plus a potential extension. And it was quite a good time frame for a group of 3 post-college graduates to build a .com site, develop it, and sell it in 1 year. But when you're building a business in clean tech and water specifically, you need to develop technology, to pilot it in small scale, to scale it up gradually, and to penetrate into a very conservative market. The return is there. The market is huge, and you will get at the end to very nice revenues. But 7 years, which was originally the term of VCs, in most of the cases, will not be suitable for investments in water and infrastructure in general. And what I see today, and I believe that many people in this room see also, is that generally the term of VCs is now extended to 10 years with an option extension to 12 and 13 years. And this makes investments in water technologies much feasible for an exit during the term of the VC.
You agree with that, Aaron?
I don't know if I would say 10 to 13 years, but I think the time frames are very similar to a lot of things that VCs have invested in the past, drug development, a lot of material science plays. So I think there are a lot of VCs out there that are very comfortable with the clean tech type time horizons, and I think the water space is going to be very similar. I think there's a lot of things out there that may take a lot less time.
Yeah, I think the key issue that's interesting, and Eitan really hits it, is it's a conservative market, right? And so you've got the technology development, but the most critical component is developing and building a precision sales group and marketing team that's able to deal with this conservatism. And what I think is going to be changing, and we're seeing it now, is people were always interested in what we were doing, but they would smile at you but not purchase. There's another word for that, but. And now we're actually meeting with people who are being driven by these macro trends in regards to scarcity that have them, their job is depending upon being able to address this issue. So I do think that traditionally the time horizon's been long, but I think it's going to start accelerating. We're seeing it in our own pipeline and our own marketing.
I'd like to thank you all very much, and thanks to the audience.
Thanks.